So to start this week, guys, there's not a lot of economic data associated with the market or even coming forward, but I want to break down one thing for you this week. Looking at my chart, we can agree, we all can agree that the market is super, super, super overbought, super extended. As you can see, again, I spoke about this numerous times, guys. Don't be fooled, don't get tricked. This is how the market hold people, hold in investors, to my short-term investors, and you will never see these prices again for months, for years. But as you can see, guys, look at this: one, two, three, four. What are we approaching here? Resistance. Once again markets start to enter in the overbought, again in the overbought situation, what we normally do is pull back. It has been proven itself. It had happened and it will happen again. As you can see, super high, run up, news, everything, market run all the way to the sky. Look at this, drastical pullback, pushed up, rejected, pullback, and all of a sudden there's a new president. What happened, guys? We run all the way to the moon. On this pullback, guys, one place you want to be, and only one place. And I can tell you from now, when this happened, I will be here to remind you that this happened. This is where you want to be. Mark this thinker symbol down. Let me spell it out for you. S Q Q Q. Again, let me spell it out for you. S Q Q Q. Because when the market start to reverse all of this hype from the selection of a new president, guys, we all got to face it. And to save yourself from the heartache, sleepless nights, and also from going crazy, you want to make sure you prepare for this. We don't know when, we don't know how, but in regards to economic data, as you can see, the 10-year treasury yield is coming down. Market can continue to rally with no second thought about that. We have seen this numerous times. We can continue to rally with this coming back, but also take into perspective that this week there's not a lot of economic data that will move the market substantially, other than last week when we absorbed the new presidency and what have contributed to this. You can see that market is leaning towards the better side or greater side. But I know for a fact that once something goes up, it must return. It must correct itself. And when that time happens, guys, please make sure you subscribe to this channel and you like this channel, because I will be posting and I will be keeping you guys up to date. But I want to bring to your attention that next week, not a lot of information concerning the market. Of course, we have earnings that's coming out because it's earning season. Pay attention to one thing, I think, which is QCOM, ARMS. Oh, wow. This is going to be super, super, super. Wait, no, this doesn't look likely because we have passed. Forget that page, guys, because we have passed those earnings already. I needed to refresh my page. So on Monday, which is 11/11, no report is expected, and we have CPI on Wednesday, which this definitely can move the market to a greater high, and then Thursday on the 14, 11/14, continuous claim and PPI. This is definitely a market mover. But I can tell you guys, pay attention to these reports, because when these news are out, the market just want one slight thing to happen and we can pull back 500-600 points. It happened already, and as you can see on my screen, it will happen again. But you want to make sure that you're prepared for it. With Tesla going to the moon, guys, so Tuesday we looking to hear from Home Depot. I'm going to break that down for you guys because I think it's a strong stock. We were looking towards it. Walt Disney, we're going to break all of the most of these stock down. Alibaba as well. But Home Depot, I think it's definitely a buy. Why? With inflation going down, guys, money is more accessible. And with this said, guys, we have access to money, so more home owner are going to gravitate towards this to do all their home improvement that they have been waiting for. And wow, look at Spotify, that's going to report on Tuesday. So let's break down. The first stock we're breaking down today is SPOT. So SPOT. So let's go over to the stinker symbol and see what's on our plate for today. So as you can see, Spotify has been killing it. We spoke about this stock numerous times, and it's at the all-time high of $405. And don't get me wrong, with reports to come out, I definitely think they're going to beat earnings. But as you can see, if they don't, and you get a pullback, guys, where look, the last time Spotify showed support, twice this had happened. Up, they show support over 200-day moving average. Sold off, got rejected. Sold off, got rejected. Pushed up, got rejected. Sold off, and found support at over 200-day. As you can see, it's a great stock, and they're reporting Tuesday. What is expected from SPOT? Let's go over and see what what they're doing and what is the expectation. So let's plug this in. SPOT. Right, so we're looking a little better now. So as you can see, the day range the last time they traded was 397 to 405, and the stock closes at $400 a share. And it's at, again, the stock is at an all-time high, which is 405.93 cents. And the company is great. They're doing significant, tremendously well, and with no regrets. I definitely think they're going to beat earnings, but I want to see what is expected from this company. So where would I go? Let me see. SPOT. What's going on with Spotify, and how can they long-term, short-term bullish? Again, strong sentiment towards this. As you can see, guys, this is the earnings. So what is expected? Estimated $1.83 when they reported on the 12th, which is Tuesday. So $1.83 is expected from Spotify. Do I think they're going to report and beat earnings? Yes, I definitely think. But if their guidance is not good, again, the stock can pull back. But as you can see, the stock has beaten earnings tremendously, numerous times. One, two, three, four. For the last four reports, they have beat earnings. But yet still, again, if the earnings is not good, you got to give the stock some time. It will recover, but it's proven for a fact that once the stock pull back to a 200-day, normally find support. This is where it normally pull back, push up, and if it does for a long term, it's a great buy. All right. So what other stock is on our chart to break down? I'm looking at Home Depot, which is, I think, is a strong buy, which is HD, and Alibaba should come up next. So let's go over to HD and see what's going on with them. It's trading around the same price line, which is 405. It's not so much of a better stock, I would say. As you can see, with comparison to Home Depot and Spotify, you can see that Spotify was trending in a straight upward trend. With Home Depot, it's on the other side where it doesn't find support over 200-day. It tends to dip with that news. With good news, with bad news, the stock tend to fall below over 200-day. So let's see what is expected from Home Depot coming in weeks. Coming when Home Depot is reporting on Tuesday as well. So let's plug this in and see what is expected from Home Depot. No, wrong website. So think a symbol. We have HD, long term, short term, intermediate. Its stock is a great buy, great hold. So let's see. Same thing again, have been beating earnings. So it's a lower than previous, because previous estimated was $4.53, and they had report $4.63. And now they're asking, of course, they're going to lower the expectation. Why? Because again, from coming out of this pandemic, guys, inflation was up, and we wasn't expecting a lot from Home Depot. Why? Because the source to obtain money wasn't in our favor, because interest rates are so high. No one would take the risks, or take it upon themselves to go and seek a loan, because you're going to pay him back what, 7.58%. Who wants that? I don't think the average man wants to deal with that. So now they're saying that the expectation is $3.64, which definitely makes sense. But as you can see, the stock has been doing well, and it's expected, if you had bought for the last 1 month, you would have been down. But the stock is trading over $400 a share. And again, always do your due diligence before you get into any stock whatsoever, because if you had bought over the last month, you would have been down on your investment. But I'm not sure if they're going to beat earnings. We're never sure about anything. Stock have beaten earnings and still fall on their faces. Example, Meta had beat earnings and still got rejected, beat earnings and sold all the way off, guys, right back to low $550, low five, mid $500, because what? There was just something not sure with it, with their guidance. So with that pullback, again, there's so much to expect, guys. But again, let's break down Alibaba, because Alibaba is one of the stock that I've been watching for a while now, and I never got into it because I don't see, it's just not a US company, and I don't see myself holding it. So let's break it down for all the Alibabas holder out there. BABA. So what's up with BABA? Trading at $94 a share. I've been watching this stock quite a while. As you can see, it's not a great stock, guys. It's trading below our 200-day moving average, even though it's trading above our exponential moving average, which is good, but it fails to pass. This is not somewhere where you want to invest your hard work and money. Definitely not. Definitely not. Even here on the last 180 days, it has shown a strong support, but got rejected, coming back down. But if you look for the last 3 years, my bad. See for the last 3 years what the stock has been doing, trash. So if you bought the stock 3 years ago, guys, you would have been down on your money. So that's not somewhere where you want to be. So let's break down Disney. And again, guys, if there's anything that you want to know in regards to the stock market, feel free to reach out. You can reach out to me on my YouTube channel. Just post a comment and let me know how can I help, and I will definitely take the opportunity to help each and everyone, because again, I've been doing this quite a while, for 6 years to be precise, and I'm trying to grow my account to where I don't have to rely on my 9 to 5 anymore. But one day I will get there, and that's a promise to myself that I will keep. Also, Disney has been doing tremendously bad, as you can see, trading again below our 200-day moving average. It's not somewhere where I'll definitely invest my money. Look, again, it's trading at $123 early on this year in March. Got rejected, keep selling off all the way back to what, $82 a share, pushed up gradually, and now reporting earnings. I don't see Disney beating earnings. But again, guys, if there's anything that I can help you with, please let me know. That's the reason why I created this channel. I created for you guys so I can help you guys. But until then, like, subscribe to the channel, and let me know how can I help. Until then, stay green in the market.